Hey everyone, welcome to a Optimum FX educational video. So in this video, I'm just going to talk about how I scalp the lower time frame, so pretty much how I day trade, and basically my thought process, and I guess like my parameters or my confluences to take a trade. And it's pretty much just like a step-by-step process on pretty much how I day trade and how I scalp. So firstly, I'm just gonna pretty much talk about the brief stages of any market. This can be like currency, commodities, indexes, equities, so forth, like stocks in general, from my personal opinion, and from my experience. So pretty much when you go into any chart, you're always going to identify some sort of trend, and we're not really going to go into talk about the fundamental drivers on what makes that asset appreciate and depreciate and so forth. Not really going to talk about that. We're just pretty much going to talk about the structure, and pretty much talking about liquidity, and just talking about price action overall. So pretty much in most markets, on all markets whatsoever, we will constantly have, it's pretty much just two stages, and that is accumulation, right? And then we eventually have the distribution. Okay, so accumulation, this little point here, so that is roughly, you call it accumulation, order block, range, whatever you want to call it, because at the end, like, it's just the same thing. It's just like buy orders and sell orders being collected, and once we have, I guess, enough momentum, we will push, we will continue the trend, or we will eventually push further to the upside or downside, whatever it is. So that is constantly how the market moves, like every single day, every single second, every single minute, no matter what. Okay. And then another thing that you need to keep in mind is the time frames. Okay, if you scalp, there's a high chance that you've obviously looked at the 1 hour to 4 hour to identify the direction, or even the daily, to actually identify the true macroeconomic trend, or the true market structure of that asset, right? But if you're day trading, you're most likely going to be looking at, probably like the 1 minute, maybe the 2 minute, 5 minute, or every now and then maybe the 15 minute. And if you go through like if you scale down, scale up, in all those different time frames, you are most likely going to see that price action is always going to be the same. It's just a time difference. It's just a time period, because at the end of the day, like, price action is the same. Like, at the end of the day, it is always the same. Okay, and then when you start to scale down, scale up on time frames, you'll actually be able to recognize, I guess, what currencies and what commodities have cleaner price action. Okay, so at the end of the day, the market is just going to accumulate and distribute. Okay, it's just a matter of when and what to look out for. Okay, and what signs will give you indications before it's happening. So that's what I'm going to try to explain, right? So as we know, market accumulates, right? Accumulates. Eventually we have enough liquidity, and we can, in this scenario, push to the upside. Okay, so how do you identify that this is going to happen? So we'll go to these volatile pairs, where price action is very clean. Just taking notice, we are on the 1 minute. I'll actually scale that as well and kind of show you. So these little areas or zones, I've discussed this in another video I posted like months back, and pretty much these are key levels. Like, to me, in the past, we have had a lot of price sensitivity once we've reached these areas. Okay, so I didn't mark out these zones like last week. Like, these zones have been here for like a long time, like months, years, and so forth. So I just know that there's going to be a bit of price sensitivity when we go and reach these key levels. So going back to to analyzing the lower time frame. So as I discussed previously, we are constantly accumulating and distributing eventually. Okay, so in this scenario, we do have a bit of a distribution phase, but obviously we can definitely see some lower time frame bearish price action. Okay, and the biggest thing when you're scalping, obviously, like, it's very like in the moment kind of thing, like very instinctive. Like, it is very hard to make, active decisions and to make accurate decisions as well. Like, it can be very hard. Okay, obviously this is all in hindsight and this is in the past, and it's really easy to monitor because like it's all well and done. Like, it's just it's just really easy to say, oh, I would have sold here, but alright, but I mean that's not always going to happen. Okay, like obviously in hindsight it looks so much easier, but when you're actually trading it live and you're actually using real funds, like, that's when the pressure starts to build. So firstly, we're going to have a look here. So we do have some bearish price action here. We're respecting our key level as well here at 1955.5 roughly. And then let me zoom out. So, and then we are now rejecting this little sensitivity area. Okay, so your main confluence to start shorting here is once you get a candle body closure. Okay, so just let me get rid of that and let me zoom in here. Okay, so the time, like obviously it's giving you signs already that we are going to see some bearish price action, but your high probability trade to execute on is once you see pretty much closures. Once you see closures below 1955, that is when it's time to sell. Okay, that is when it's time to sell. As well, you can expect later on, once we actually did close below here, some people will start to get FOMO and possibly get in a bit late at 1953, and they will only catch about 1953. They'll only catch about 20 pips of the action, which is pretty good. Okay, which is pretty good. But eventually, we actually do retest the previous lows and steadily come back to the downside and reach these previous lows. And now this is a new accumulation phase. Okay, obviously we did have the strong bearish price action, consecutive lower highs and lower lows. That's very easy to see, but the main thing to watch out for is the candle body closure. So once you see a candle body close, once you see one close, there is more than likely, there's probably honestly a 70 to 80% chance that you're going to get like a nice squeeze in this case to the downside. So just remember that. Okay, there is a very probable chance that you are going to push further to the downside, and it's like up here as well, right? If we start to snap back into this previous range, start to get some closures above like 1955, there is a very good chance that we can push to the upside. And obviously this was a bit of a fake out here because we actually did retest 1955 again, but we only reached 1956, and then we actually did grab a bit more liquidity, but the fact that we didn't actually do a bit of like a triple bottom or triple bottom at these previous lows at 1952 is showing me that there's buyers in play. So I know if you did lose on this trade, it is what it is, but once you snap back and get some, remember, candle body closures back into this range, there is a probable chance for us to push to the upside. Okay, definitely by far, and we could have like a stop at 1955, and we could have like a 15 pip stop loss at 1954. Obviously that is a pretty big stop loss, but yeah, obviously this trade did play out and it would have accounted for that previous loss and then some as well. That would have been like a nice 1 to 2 roughly, because we actually did snap back into this previous range. So that's honestly that's all it comes down to, and yeah, that's how I would execute on that trade. Obviously when you are trading specifically like this, you're just waiting for the accumulation phases to begin. Okay, and you understand once you break below the range, break below or break above the range, whatever it may be, there is a good chance that you're gonna get at least a 10 to 20 pip squeeze, by far, at least. Obviously there is a high risk play if you have strong bullish momentum, or that you had an idea or I guess bias that we were going to snap back into this previous range, you can wait for like a double bottom, but obviously that is going to be the high risk entry, and that high risk entry is obviously going to pay a lot more, and you're obviously going to have a better risk reward, you know, obviously like a 1 to 3, 1 to 4 even. But if you're taking the buys above here, like if you're taking the buys above the range or the sells below the range, you're going to get like a 10 to 20 pip squeeze, and it all depends on the volume and the volatility and understanding like the higher time frame trend as well. So that's just what I really want to talk about and discuss. Obviously GJ's been a bit messy this week, so it's kind of hard to pinpoint, but obviously we do have a bit of a range here, so we're just gonna draw this out. Yeah, so we did have this, let me do that one again. Yeah, so we did have this like range here. We did have like a bit of a double top here, and we didn't really have any strong closures above here. We just pretty much snapped back into this range, and during the time, you know, obviously it would have been, you know, probable for us to grab liquidity above 161, 130 on GJ, but the fact that we actually closed below here, and then we actually closed below, you know, this little tiny order block here, is just enough confluence for us to push to the downside. Obviously this is all in hindsight, it's just being very cautious, you know. Once you start to break above here and fail to close back, you know, there's a good chance that you can push further to the upside, but unfortunately that didn't happen. We did trade back down, and honestly we just started falling further to the downside, and honestly breaking below 160-170 is probably a strong confluence for us to push further to the downside. And now here, so we had like this 1 minute candle here, which pretty much just closes well below the range and gives us like a nice little squeeze to the downside, and I'd probably expect price to come down to 850. Obviously this is when the market closed, so this was like in the final minutes of the trading session on Friday. So but yeah, we can actually go back and see other ones as well. So alright, so obviously we were, you know, trading above this key level here, had this bit of a range here. I'm not going to pinpoint this area here from 400 to 500. I'm not really going to pinpoint that. What I am going to pinpoint is this little consolidation area, okay? Because at the end of the day, it's more or less just about equal lows, okay? And understanding the higher time frame trend, and if you understand the higher time frame trend, if we're bearish on the higher time frame, I know GJ is not bearish by far, but on the lower time frame, if you can adapt to the pullback place, you can start to get in, to the high risk positions. All right, and this is honestly, this is a very strong confluence that there's more sell orders in the market, because we didn't obviously double top here. Okay, so considering that we didn't double top at 161, 160, which is a key level, we only grabbed liquidity at 100 flat. Once we started to close below this range here, that is enough confluence for us to push further to the downside. And then the fact that these candles didn't snap back into this previous range is, giving us confluence that we are going to push further to the downside. And once you get some candle body closures below here, obviously this is a more of a safer entry, because we've actually pushed down and now we've grabbed liquidity back up at this range at 930, and we are pushing further to the downside. So I mean, that is pretty much how I trade, how I scalp in that. Just be cautious, you just gotta be cautious. You gotta be wary of the market conditions, and you do have to look at the higher time frame. So you always have to zoom out and understand the actual true trend. Whether we're taking part of impulsive plays. So in this scenario, impulsive plays will be taking buys and pullback plays will be taking shorts. So yeah, so that's pretty much just how I day trade and scalp. And if you're a day trader or scalper, you're you're pretty much like relying on volume and volatility. So you're pretty much like relying on London sessions. So the first 2 to 3 hours, usually the first couple of hours, and in New York as well. So you'll often see, a bit of a pullback or liquidity grab, but that's a whole other video in itself. But yeah, this is pretty much just how I day trade or scalp. It's worked effectively for me, and this is without using any indicators. It's just analyzing market structure. Okay, so if you enjoyed the video, please feel free to like, share, and comment. Thanks.